Ladies and gentlemen, good day and welcome to Premier Explosive Limited Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I, on behalf of Stellar Investor Relations, welcome you all to Premier Explosives Limited Q1 FY24 earnings conference call. We shall be sharing the key operating and financial highlight for the first quarter ended June 30, 2023. We have with us today the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, and Managing Director, and Mr. Srihari Pakalpati, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance have already been issued. Now I invite Mr. Chaudhary to share his initial remarks on the company's performance for the quarter.
Thank you, Vishal, and good afternoon, everyone. Thank you for joining the call. We'll begin the call with company's operational performance during the quarter, followed by the key industry update. The recent highlight for the company has been strong order inflow. We had started the physical 2024 with an order book of rupees 521 crores and additionally received order inflow of almost 725 crore rupees in the year till date. Our current outstanding order book stands at approximately rupees 1108 crores, a strong growth of 71% year on year and 113% quarter on quarter, and translates into 5.5 times of our financial year 23 revenue. Execution of these orders will help us to bid for bigger and better orders from Indian defense industry as well as from the foreign defense entities. Let me take you through the new order update as on date. Ministry of Defence IAF supply of shafts for rupees 292.11 crores and supply of plates for rupees 260.15 crores, inclusive of GST, each to be executed in 12 months. Ministry of Defence Air Headquarters supplying 50 mm MTV plates for rupees 76.78 crores to be executed in 12 months, including GST. Bharat Dynamics Limited supplying of Akash booster vane for rupees 9.73 crores, including GST, to be executed in 12 months. Bharat Dynamics Limited supplying of P1 and P2 motors for MRSAM for rupees 43.26 crores, inclusive of GST, to be delivered in 24 months. And L&T Limited supplying of PSOM XL motors for rupees 13.94 crores, inclusive of GST, to be delivered in 12 months. In our previous conference call, we have already informed about the new developments on DRDO technologies, which have been already transferred to us, and we are fully working on those technologies. We have also informed that we have completed the design and development of various products for foreign entities and for export purpose, and we have started supplying the export against these, the bulk export orders we received, and we started supplying. Latest thing which we have already informed is we have exported one container of 160 mm rocket motors, and we have exported 104 numbers of warheads, and we have also exported another 100 numbers of rocket motors in the past 2 months. Coming to quarter's performance, during Q1 financial year 24, Premier Explosives reported excellent performance on overall level. Our revenue for the quarter increased by 20% year on year and 18% quarter on quarter to rupees 62 crores, highest revenue post the COVID-19 pandemic. Premier Explosives have achieved highest ever EBITDA margins of 27% in Q1 FY24, which is a significant improvement mainly on the back of higher execution and contribution from defense orders. Consequently, the PAT margin of 13% was also the highest ever. And outlook for Premier is the only qualified Indian company for countermeasures and the only Indian company which is in the export of fully assembled rocket motors. In addition to the rocket motors and warheads, production of mines against new orders is going on at Katepalli. This is expected to give good boost to revenue in the coming quarters and financial year 24-25. In terms of cash flows, we have generated healthy cash profit of rupees 10.91 crores with our execution run rate stable and given the nature of our cost structure. The operating leverage of our business will help us to generate better cash flows, which will be utilized towards strengthening of our balance sheet. Coming on the defense industry, the defense industry status about the production rose to 12% from year on year and crossed rupees 1 trillion mark for the first time ever. And exports of the defense products have surged to rupees 16,000 crores. The Indian government and defense ministry are trying to reduce the dependence on imports from the foreign nations. India was the world's largest arms importer in the past decade and was dependent on Russia for more than 50% of its military supplies. Total value of India's local defense production has jumped to rupees 1.07 trillion in financial year 23 and is rising. In order to overcome the obstacles faced by domestic manufacturers and promote local defense products, the Government of India is constantly collaborating with the domestic defense companies. Since the Government of India has started with the Atmanirbhar Bharat initiative, it has helped to encourage the domestic technology development to build a self-reliant India in future. The Defense Acquisition Procedure DAP prioritizes the indigenization of sourcing, manufacture, research and development, as well as software and other high-tech applications. By 2025, Defense Production and Export Promotion Policy 2020 seeks to generate a revenue of rupees 1.75 trillion, including rupees 350 billion in exports of aerospace and defense items and services. It also aims to move away from licensed production in favor of local design, development and manufacture. This program intends to double domestic industry procurement from rupees 700 billion to rupees 1.40 trillion by 2025 with the aim to boost the domestic defense industry. Coming on the aerospace industry, with ISRO's success in establishing SSLV, that is Small Satellite Launch Vehicle, and Government of India's encouragement to private sector to take up satellite launching on commercial basis, opportunities are opening with space fees, and these are expected to fructify in the coming 4 to 5 years. And Premier, as you are aware, the Premier is very well entrenched in this and qualified as a vendor for the propellant casting and for all these motors. That is PSLV, PSO and XL. SSLV is a new area where Premier has already done it at Sriharikota. Now opportunity is opening up to do in the private industry. Now we will share key highlights from the mining industry. The mining industry, where the coal is the major mining sector, the Ministry of Coal, the domestic coal production has achieved a remarkable feat with a substantial surge in overall coal production during May 2023, reaching at 76.26 million tons, surpassing May 2022 mark with an increase of 7.1% year on year. The collective coal production in April-May financial year 22 149.41 million tons from 438.41 million tons with a growth of 8% year on year. The all India production of coal during 22-23 rose to 893.08 million tons with a positive growth of 14.76% as against FY21-22 at 778.21 million tons. The government-run Coal India has unveiled a futuristic plan indicating that the country must move from open cast mining to underground mining, which is more beneficial to the environment. by quadrupling production from underground mines to 100 million tons by financial year 28. Government wants to increase the share of underground mining of coal for sustainable mining sector through the Atmanirbhar Bharat model. By 2030, the Coal Ministry is expecting to increase the share of underground mined coal to 10% from the current mining level of 4%. Also, the CIL has prepared the roadmap to achieve the target shared by the ministry. To achieve the underground mining vision, coal companies need to be upgraded itself with the latest technologies and scaling the production of underground mining will help to reduce the importing of coal, and further it will help on saving foreign exchange. Thank you. Now I request our CFO, Mr. Srihari, to share financial performance.
Thank you, sir. Good afternoon, everyone. The results presentation for the quarter has been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. Now I will present the financial results for the first quarter ended June 30th, 2023. The revenue from operations for Q1 FY24 stands at 62 crores as compared to 51.8 crores in the corresponding period last year, which saw a growth of 20% year-on-year and 18% quarter-on-quarter. Our operating profit for Q1 FY24 stands at 16.7 crores as compared to 5.8 crores with a growth of 187%. The operating margin for the quarter stands at 27%, which is the highest ever EBITDA margin in the history of the Premier Explosives, which is already shared by Mr. Chaudhary in his initial remarks. In Q1 FY24, we reported a net profit of 8.2 crores compared to 1.3 crores in the Q1 FY23, with a growth of 551% as compared to the corresponding period last year. And even on the net profit margin, Premier Explosives have achieved the highest ever net margin in the history of Premier. Now coming to the order book, the company's current total order book stands at 1108 crores, out of which the higher margin defense segment forms the majority, which is at 908 crores, which is 82% of our total order book. Explosive segment stands at 77 crores, and service segment, that is operational maintenance, is 123 crores. During the quarter, with the order book, domestic order book contains 87% and export orders contains 13% of the total order book. The order book represents a solid and strong growth over the previous years. We are very much confident that with our improvement in execution run rate, we expect forthcoming quarters will be continuing with the growth trajectory. With this, we now open the floor for questions and answers. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order for the management to able to answer questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The first question is from the line of Aman Vij from AlphaStreet Investment Management. Please go ahead.
Good afternoon, sir. My first question is on the flares and shafts business, which we recently got. So if you can talk about, so what we understand, typically these are consumables, but the usage will be normally looking at the history. Is it like the usage is once per every year, or how long is the replacement cycle, if you can talk about it? And what is the annual requirements of India as of now? What we understand is that we are the only approved player in this. So then in that case, is rest of the products imported? So if you can explain this industry a little bit more, and where do we see the repeat orders coming in? If you can talk about that. This is the first question.
Yeah. This orders what we got are emergency procurement orders, which we have to meet the requirement in 12 months time, so that the Indian Air Force can replenish all their things. And afterwards, these have got a shelf life, and they are also consumed for training and practice and all purposes. So after this, there will be a regular consumption. For this, may not be at this level that in 12 months we get such a big order, but this will be consistently, there will be offtake.
Sorry, so typically it's like 20-30% replenishment is done every year. And also if you can talk about where is India currently getting its requirement? Is it through imports? Are we import substitution? What is the addressable market on the shaft? These were the first questions.
It's not clear. The speech is not clear.
Sir, is it better now?
Yeah, please try.
Yeah. I was trying to understand. You mentioned that normally the product is used in training and exercises also, and the repeat order won't be to the same extent. But typically it is like replenishment. If we talk about, is it like 10-20% is used in a year? If you can talk about the same, then if you can also talk about as of now the products, these players and shafts, were they getting imported in India? We are an import substitution, or what is the addressable market? Because maybe these are specific for a particular kind of aircraft, but India will procure more aircraft. So example, Rafale and all those things which are coming up. So if you can just explain the market, what it is currently, and also the offtake. Normally every year replenishment will be like 10, 20, 30%, or is it lower? If you can talk about this thing.
I will talk about the aircrafts and other issue rather than about the quantities. Yeah, what we are now, the orders what we received are for both kind of aircraft, that is the NATO dispensing systems and also for the Russian dispensing systems. The orders what we received cover all kinds of shafts and flares used in both. There are only two types of systems used on this, and these are being made as import substitution, and as Atmanirbhar India we are making it. And the quantities, of course, like I mentioned, it will not be such large quantity in future, but there will be always consistently, there will be an offtake of something between 10 to 20% of current order value.
Sure, sir. My second question is on the grenade side. So last time you explained that the trials by the MOD is basically the customer is pending, and they are expected to come anytime to our facility. So if you can talk about the same, when they are expected to come, and also what will be the timeline after that? So if they visit in next month, so after that there will be RFP. When can we actually start supplying the grenade product? If you can talk about the same.
I don't think we can comment on that, because it is not like a consumer industry like coal industry where consistently this much mining is there, will become offtake and all those. Because these are need-based orders placed by MOD as per the requirement. So we cannot say that every month or after 1 month or 2 months order will come or like that. So that's difficult to say.
No, sir. I was talking about the other product, grenades. So for that we are still expecting the orders, right? I'm just trying to understand when is the inspection due. You talked about the first trials which we were supposed to do is done, but now the customer is supposed to do the trial.
Yeah, I think like I mentioned, the speech is somehow it's not very clear. We are finding it difficult to understand and reply. But still, I understand you asked about the grenade ammunition. Yes, grenade ammunition. We have participated under DCPP program, and the development part and all those are completed as per DCPP. And we have also established our production facility, and we just submitted to PESO for clearance, and it is expected any day, the clearance. And in the meantime, we started getting queries from the paramilitary forces and other agencies about our status of our supply status and then preparedness. We are taking up, and I think coming in this financial year, I think we'll be working on that, and then probably we'll be participating in the RFPs. Now, delivery starting is different, but RFPs have to come and participate, and they have to get converted into orders. Then deliveries will start.
So these will be small orders like 10-20 crore, or do we expect like 50-100 crore of RFPs and orders in these grenades over the full year?
These grenades also orders will be big only. If we get army orders, that will be a large order. But if we get paramilitary forces orders, there will be multiple orders of smaller value.
And you expect RFP to happen this year only, right?
Yeah.
Okay, thank you. I have more questions. I'll come back in the queue.
Thank you. The next question is from the line of Neeraj Mansinka from White Pine Investment Management Private Limited.
Yes, sir. Question on the QRSAM. The orders that you have received, is there any part of QRSAM order that you have received?
No, QRSAM orders have not yet come. It's only the smaller quantities from DRDO we are getting, and then we are that is as part of the development of it. But production orders have not yet come.
Okay. So can you give us some clarity when you expect that to have come in, and what quantum can it be?
We have submitted different queries to answer the queries and all those, but the quantities appear to be 400, 500 numbers, but yet to get the response and all those. But yes, with the smaller numbers for qualification trials and all those, we are producing and giving them, and they are being tested at DRDO.
And are you the only supplier for the same, or there are other players also who are for QRSAM?
As on date, propellant, we are the only supplier.
Got it. Okay. And sir, can you give some more clarity? In the last call, you had said that you are participating in RFP for ammunition of 4 variants.
Little louder, please.
So last conference call, you had said that you had participated in the RFP for 4 variants for ammunitions. Can you give some more color on that?
No, actually in the last call, we have given some answers with regard to the RFPs.
Right.
People have asked about the percentage in plates and chaps, which we complete large number. Okay.
Right.
So, which has been materialized now.
Right.
So RFPs is a continuous process, which is relating to so many products.
Got it. And sir, regarding your Israel or export order of rocket motors, do you see more scale up happening from 100 units that you have exported, or you see on a run rate of, I think, 50 units a month you average that? So do you see that increasing further from you, or you can see that continuing on this range?
We expect them to increase.
Okay. So sir, and in terms of your capacity, how much is the capacity for you to manufacture the shafts and flowers, and or let me put it, what can be the revenue potential for maximum utilization of the shafts and flowers that you have got the order for?
Like you have mentioned, the 50% of the order we can execute in the current financial year. The balance 50% will go to next financial year.
Okay, great. Thank you very much. I'll come back in queue.
Yeah.
Thank you. The next question is on the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah. Hi, sir. Sir, a little bit of repetition of the question asked previously. I would just want to understand of this 550 crore order which we have. After what interval will the replenishment or will be required by the customer, and what is the timeline?
I don't think we will be able to answer this, because these are all MOD decisions, and these things I don't think we can comment on these figures.
Okay, fine. And before we got this order, these products were being imported in the country, or how was it?
Yeah, earlier they were being imported, but past 3 years we are supplying. Premier only is supplying this.
Got it. Got it. And how do you see the order book momentum which we have built up? How do you see that going forward? What is the intensity of orders you expect to get?
As we are delivering, the more and more confidence is building up in the customers, and we are getting orders, and we expect this to continue, the trend, whether it is for export or export customers or domestic customers. We have proven ourselves as dependable and delivering people.
So when you say the trend, you mean the trend of getting like 500-600 crores order per year, or what? How do you define the trend?
Yeah, that is our target is to grow, and all those 500-600 target is there, even higher than that. So.
Okay. And last question.
Like earlier, several interactions I've expressed that we are multiple projects we are in, missile and then other projects which are in development crossing. So as one project gets into production and coming to a completion, then the second one takes over. Like Akash once has fueled us, and then we have done well, and Akash and all those. Now Akash is tapering out. Now MR SAM and Astra, they have all taken over. And similarly exports, what we are doing. The more and more orders are coming for development and execution. So we hope that the same trend will continue.
Got it. And last question. So we did 60 crore in September quarter also, September 22, and now also the similar top line where the margin difference is huge. So if you can elaborate on that, on the product mix side, what explains this big margin improvement?
This is mainly due to the product mix. Basically, even in defense, there are some products which can give us a good margin, some products which may give us a less margin. But in this particular case, the product mix makes the difference.
And how do you see your margin trajectory for the current year?
No, it will be improved. As explained in earlier question, it will be improved, and actually, if you remember the previous call, our managing director was telling to be around 20% range kind of margin. So I think we will stand by.
Okay. Thank you.
Thank you. The next question is from the line of Prabir from Ratnabali. Please go ahead.
Good morning. I am Pankaj Gupta from Ratnabali Investments. Sir, congratulations for the excellent set of results, and also the historical order win which you have received in this quarter. Sir, my first question is slightly repetitive, but sir, whether these emergency orders which we have received from shafts and flares, will it be able to suffice the entire backlog of our country, or this is just a initial part which the MOD or our government is giving as an emergency measures to fulfill a small part of it?
Yeah, thank you, Mr. Pankaj. Again, we have come back to the same question about quantities. I don't think we can comment on the MOD's requirements and what future procurement plans and all those.
Okay, sir.
Our part we can say is definitely it will not be at this level every year. This is an emergency procurement. But we have bouquet of products. It is different, like that's what I was explaining. 1 year, one product may take over another product. So we hope that we will sustain this kind of momentum and overall turnover and base.
And sir, can we assume that we would be the only suppliers of these kind of requirement in the near to medium term?
No, as on date, we are the only qualified vendor, Indian vendor, and the MOD has taken a decision to procure from local supplier only. So as on date, we are the only. In future, of course, we can't say if somebody has developed or coming to it.
Sir, excellent. Sir, last quarter you were saying that there were some approvals pending for the export order to dispatch, whether we have received the entire approval, and the pending export order of say 100 crores plus when we expect it to deliver?
This export deliveries, yes, they have what were waiting. Some of them have gone, and some even deliveries to MOD which were waiting for inspection has been completed. So the reflection of those deliveries has appeared in the first quarter performance and the result. And balance, it is like the deliveries have to be made periodically. Like it's not every month. Every 3 months the inspections are done and the lots are dispatched, whether it is to MOD or our export commitments. So,
and sir, okay. And sir, over the last few years, we have deliberately been slow on getting the orders from the commercial mining and explosives because of very high volatility in our raw material prices. So what is our view going forward? Is there any new RFP or requirement which is coming for bidding, and what would be our strategy? Because right now the raw material prices have stabilized. So if you could give some color also on our explosives business.
You're right. In the past 2-3 years, we were slow on the industrial explosives part because the prices were, selling prices were low, and then the raw material prices have gone up like anything, major raw material costs. So that was becoming a burden. But still, where our commitments are there, we still service those commitments. And new commitments we have not taken where it is not. So that has paid dividends, and then we have come back to our healthy profit making process. And now the raw material prices also have stabilized for industrial explosives, and the costs have come down, and prices also have stabilized. With that, we are again back into the business in full swing. So we will continue to be in that line. We are not going to quit that.
Okay. Excellent. Sir, one more question. Sir, yeah. Do we also foresee any kind of strategic tie-ups, etc., to enhance our capability and get into new things where India may not be self-sufficient technology-wise?
Yes, a lot of activities going on, where more and more products are being added for this thing. You have seen the past 2 years how many are added in the defense line. Aerospace is another area where the strap-on motors, you can see it in Katepalli facility 3 years back it started, and slowly it picked up and we qualified, and today now we started servicing the bulk production orders. That L&T order is one of them. The new things which are going to add, which are in the development stage and going all on, various other mines, ammunition and warheads, these are continuing.
Then, sir, I think, are we also a part of this Chandrayaan mission?
So may we request that you return to the question queue? There are participants waiting for the answer.
Sure.
Thank you, sir. The next question is from the line of Jayesh Shah from OHM Portfolio Equi Research. Please go ahead.
Hi, congratulations, sir, for super solid numbers. I'm new to the company, so perhaps my question is basic, but just wanted to get a sense on what do you think is the normalized operations that you can have in terms of, say, sales revenue? Where are your capacities right now? And is it fair to expect, as you had been indicating, that now we can look at an order book inflow of between 500 to 700 crores per annum, or is it more?
As on date, we, of course, the sighting is different, but we foresee a consistent order book of the same, around 500, 550 crores per annum.
I see. And what will be the peak revenue potential of your existing capacities?
This is product mix, different products, different capacities, facilities, and all those.
Right.
We have all the products so that it is not that one product we depend, and if defense products, today what is an emergency procurement bulk, tomorrow it may not be there. So we have built up our bouquet that this product or that product and all, it keeps on coming. So that way we have enormous capacity.
I see. So do I understand that this means that your revenue can be volatile quarter on quarter?
Yeah,
depending on the product mix?
It will not be consistent because it depends on the deliveries made. So we may be producing, but holding it, and then when we deliver it, it comes. So there will be fluctuation in revenue.
I see. But is it fair to expect that given the order flow and the order book that you have, you are looking at a sizable jump from your current scale of, say, 200 crores per annum to stabilize at something like, say, 300 to 400 crores per annum?
We are expecting even bigger than that. Like I mentioned, we are looking at something like above 500 crores per annum, not 200 crores.
I see.
Yeah.
So, in a way, 500 crores plus of order book and 500 crores of revenue could be a sustainable thing.
Yeah.
And how is the working capital cycle, sir?
So actually in defense, the working capital cycle is more comparatively, but now at this moment, the defense working capital cycle is about almost 120 to 140 days.
Okay. And is there some retention value that one has to actually leave on the table? And how much is the upfront advance that you normally get?
So normally there are only few cases there is an advance clause. At least in these two large orders, there is an advance clause which we are going to try passing. Second thing, it does not necessarily mean that there should be advance in every contract. Need not be.
Right. And how's the retention thing?
Retention is not there, at least in these orders. Yes, there are retention money for some of the contracts from DVL kind of thing, but even that can be claimed by submitting the bank guarantee. Not that money is stuck there.
I see. Thank you very much. I'll come back in the queue. Thank you.
Sure.
Thank you. The next question is from the line of Milan Shah from Urmil Research. Please go ahead.
Hello.
Yeah.
Hello. Can you hear me, sir?
Yes, sir.
Oh, congratulations for great number and wish for the same. Sir, my question is, we have got this huge order. We have that capacity, or we have to add for the fulfill the order?
We have the capacity, sir. We have already built in the capacity.
Okay. And what is the percentage raw material of imported for this order? Or raw material we are used for manufacturing, which is required to import?
This will be within the parameters specified by the MOD.
Okay. Thank you, sir. And wait for great.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a good order win. Sir, my first question is regarding the orders. So, as of today, let's say how much worth of orders we have tendered or bidded and awaiting the results?
I don't think we'll be able to add up in 10 days. There are so many tenders, and it's a regular ongoing process.
Okay, but if you can roughly, so last quarter you said we have, participated in 600 crores.
That time we had this big one in our range, so we could mention that. But every tender cannot be a big tender like this. So we have multiple, so many, so that's a little difficult to have content.
Okay. Secondly, sir, on the margins, so you guided that we do sustainable 20% kind of margin, but at the same time you also mentioned that in the current quarter, due to the product mix, the margins are at historical high of 25%. So now going forward, the product mix will be very much tilted towards the defense side. So do you feel that the 20% margins which you are guiding is too low, or you feel that the current execution and the future orders have a different margin?
No, that actually we are normally we have given the guidance of 20%. No, there will be some improvement. I mean, there may be some improvement there, maybe. That let us see. Because it varies in quarter to quarter, because some quarters it may be high. But on an average out, I think it should be 20% and around 20%.
Okay. And this quarter, was there any significant improvement in the margins in the explosive business, commercial explosive?
They also contributed to some extent. It's not that they have a significant, but they also, all divisions of the complex have contributed to some extent to reach this level.
Okay. And my last question on the export side. So, over the last couple of years, we were getting a small orders, and obviously the client were also testing our products. But now we have started the deliveries, like you mentioned in last 2-3 months, the deliveries have gone up. So do you expect any significant order wins over next 12 to 15 months from the defense side, or you feel that this current 130 crore kind of order book of defense can significantly go up over next 2-3 years?
I think we have already announced orders, which earlier what you said about small orders were development orders, and from development orders already 4 are. From development orders, now we already got the bulk supply orders, which time to time we were announcing, and they are being executed now.
Okay. Okay, fine. That's it from my side.
Thank you. The next question is on the line of Vivek Gautam from GS Investments. Please go ahead.
Sir, congratulations on a good set of numbers. Hopefully it's not a one-off and sustainable. Sir, one thing I just wanted to know about was the upcoming projects, like basically the BrahMos and SSLV products. What are the likely timelines for them? And second question is, our company is one of the, have started recently tracking the company. Our company is one of the oldest company. And is it the best time you are facing in so far in the business journey? The company was founded way back in 1980 by Dr. Gupta. And as such, what about the second generation, who is the next generation? What are the succession planning? That is also important for the investors in the company, sir. Thank you.
As you said, this was started in 1980s by Mr. Gupta. Till recently, he was, he was leading the company, and he was guiding us. Now, because of his age factor and all, he has taken, now this is now run by the professionals. It has been run by the professionals with the guidance of Mr. Gupta.
Yeah, right from the beginning, Mr. Gupta himself being a professional gold medalist in mining engineering, and then with his professional background, he has run the company as a professional company, and then with full delegation and all those. So today, yes, because of that, even though he doesn't sit every day on every issue, so the company is running and it is progressing based on the foundation. So this, and as far as the succession is concerned, right now I am, as CEO or managing director, I am associated with the company for the past 36 years. So, and next generation, yes, we have our own plans, and within the company, the people who are growing, and also family, Dr. Gupta's family members are also in queue. So I think we have enough safeguards put in place so that the company runs in the course in which it is put. And even today, Dr. Gupta is available to us. His long experience is available to us on every day if we need, and we keep on using that.
Yes, sir. And what about the time and likely timeline for business, BrahMos and SSLV products and other powder pipeline upcoming projects in pipelines? If you can throw some light, sir.
SSLV, it may take 5-6 years, sir, not less than that, for fully getting commercialized.
Mm-hmm. And we had the BrahMos also, some plan was there, sir, the technology transfer. And
it's still going on. BrahMos technology transfer is going on. See, when technology transfer process, what happens is you have to conduct several trials of the composition, and finally, when you achieve all the characters needed, then you have to go in a cast with big first small motors and then big motors and all that. So we are going through that. I think by the end of this year, I think we'll be fully qualified for BrahMos.
And lastly, sir, about basically, is it the best time in the business ever since incorporation we are facing thanks to the Atmanirbhar scheme, and because the company is listed since very long time, and now the better triggers are coming in and the future looks much better than earlier time?
Yes. In fact, if you look at the lists, positive domestic production lists, if you should say that, we can identify which are in our line, and then those are all, we are working already on that, and those are expected to give us the future revenue from defense.
Okay, sir. Thank you very much. Keep up the good work, sir. Thank you.
Yeah, thank you.
Thank you. The next question is on the line of Moshmi Paul from Equentis Advisory. Please go ahead. Moshmi, your line is in the talk mode. Please go ahead. As there's no response.
Hello.
Yes, ma'am. Please go ahead.
Yeah. So congratulations on the good results. I just wanted to understand that your order book has doubled in the last 1 year. And are we expecting the same order book trajectory in the coming quarters? Can you tell me in percentage-wise what we can expect?
Yeah, actually, if you see our order book, most of the order book, around 725 crores, has been added in the first 3.5 months. Okay, so we will be getting orders on a continuous basis, but it may not be as big as this. So, but current year in FY24, 23-24, we already received 725 crores. Okay, so we will keep getting the orders on a small scale.
Okay, so how much time does it take for you to execute the orders?
So next 12 months to 18 months now. Next 12 months to 18 months, most of the orders.
Okay. And with this kind of strong order book, what is the scope of margin improvement in the coming quarters?
So we have given the guidance, which is more or less the guidance which we are thinking. We are talking about an average of 20% for the quarter.
Okay. Thank you so much. That's it.
Thank you. The next question is on the line of Naitik Mohata from Sequent Investments. Please go ahead.
Hello.
Yes, sir.
Yeah. Good morning, sir, and thanks for the opportunity. So, wanted to understand on the margins side again. So, we have a domestic book which has a large chunk of defense order. I just wanted to understand if defense has a very high margin compared to other two segments of the business, then why we are guiding on the conservative sides of 20%? Cannot we do around maybe in the range of 23-25%? Just wanted to understand why are we guiding on the conservative side on margin?
No, we can, it is not that we are given at around 20%. Actually, if you see the last year, it was 13%. So we are already, making it to 20%. Yes, we are able to give them much better results. Fine, man.
So this, I think so if you can give the breakup of this margin, so we have a defense of 900 crore, order book of 900 crore, then explosive and then service segment. So can you give the margin breakup between these three segments?
No, sir. We normally don't give segment.
Okay, sir. And sir, if you can give any color on the order pipeline which we are looking for the next 2-3 quarters. So just want to understand, we have a very large order book as of now. So any color on the pipeline, what kind of pipeline we are seeing? A quantitative ballpark number will be helpful, sir. So just wanted to understand on the revenue side, like what?
We received 725 crores in last 3.5 months. Okay.
Correct.
So we
yeah.
Getting getting some orders on a regular basis on this thing, but it's not that we will receive another crores in next 3 months. It is so we'll keep on getting the orders. So that is the case.
So maybe our order book will again go back to a normalized number of 100 to 150 crores per quarter. Is my understanding correct?
Yeah, we will be receiving that because we are producing so many different products, not only plates and charts, we are producing so many other products. We will keep on getting the orders that will be added to the order book. And at the same time, we will be executing the orders. That is a regular process.
Okay. Understood. Yeah. Thank you, sir.
Thank you. The next question is from the line of Rishabh Doshi from Nirmiti Investments Advisory LLP. Please go ahead.
Yeah, hi. Congrats on a great set of numbers. So just I had one keeping question and another question. So I just wanted to understand like what is the GST rate on the orders which we received. So I just wanted to reconcile the order book and revenue. And secondly, like this quarter we just observed that other expenses are quite low. So could we assume that for defense the other expense line item would be structurally lower? And secondly, on the employee cost side, last year like on 200 crore revenue the employee cost was around 25%. And I don't think that we have a plan of significantly increasing this number. So on a 550 crore revenue, this cost would shrink materially. So I just wanted to understand like is 18-20% EBITDA margin a conservative guidance, or it can reach higher because the employee cost will only add I guess 8-9% additional on the EBITDA.
So there are two questions. One, other expenses. The other expenses have gone down, yes, because there was a significant reduction in the export expenses because last year similar quarter there was an export of about 12 to 13 crores, against which we incurred about an expenditure of about 2 crores, which is not the case in this present quarter. First part. So because of that, significant amount of other expenses have come down. Second thing, employee costs. Yes, there was because going forward, because most of the employee costs related to the fixed component, which will not be increased in line with the revenue. Going forward, when the revenues are going up, automatically the percentage of the employee cost will come down. That will be reflected mostly in 23-24 and especially in 24-25. You can see that the significant reduction in the employee percentage on the overall revenues.
Yeah. And the GST rate for defense orders?
Sorry, I didn't get you.
I just wanted the GST rate on defense orders, like if it's a constant rate across products.
What is the rate? What is the rate you are asking?
GST rate, goods and services tax.
I can't hear you, sir. Can you please tell again?
This one. I just want. Hello, am I audible now?
Yes, sir.
Yeah, I just wanted to know the GST rate on the defense orders which we have.
GST rate. What is that? You are asking about the execution rate or what is that?
No, GST rate on the order book. So when you receive orders and you post it on the exchange, like you say that you received the order worth of 290 crore including GST. So I just wanted to know what is the GST rate.
Actually, our order book of 1107 crores is the net without GST. But normally when we disclose to the stock exchanges, we disclose with the figure which is given in the contract. That's why we clearly mentioned about the including GST. But this 1107 crores is the net without GST. It is only the basic price.
Okay, sure. Thank you. That answers my question.
Thank you. The next question is from the line of Gurvinder Singh from Fortuna Investment Advisors. Please go ahead.
Yeah. Good afternoon, sir. Thank you for giving us the opportunity. I wanted to pick on the idea of how the working capital stroke funding for execution of some of these new contracts will look like. Would you necessarily have to borrow substantially in this year, or would your internal resources be sufficient? Just wanted to seek your guidance on how your working capital position will move as the year goes by.
Sure. Yes, sir. Actually, we are not planning for the further borrowings first. Second thing, yes, there is an advance clause which we are going to utilize, and we will manage to some extent with the advance we get from the order. Second thing, we are getting support from our existing banks, so we will try to manage this thing. For the working capital requirements with the existing borrowing limits.
Okay. Okay. All right, sir. I think I got my sense. Thank you very much.
Thank you. We'll move on to the next question. That is from the line of Prabir from Ratnabali. Please go ahead.
Thank you, Pankaj, once again. Sir, just one question. Sir, we also supply warheads, propellants in India, while we supply the entire motor systems in exports. So, sir, how do we see whether we would be migrating to the supply of the entire motor systems in domestic market in future also?
Yeah, we have already started that in domestic market also. Local designs, we are with hardware we started and we are supplying some of them.
So, sir, for example, so how much value additions come, for example, if our supply is right now, say, rupees 100, and if we supply rocket motors entire, so how can be the revenue, how much revenue can be increased on account of that as a percentage?
The hardware value will be added and also assembly value will be added, but those vary from motor to motor, from missile to missile, they vary. It's difficult to say what percentage and all. Generalizing it.
Acha, okay. Sir, any ballpark on an average that if my warhead and propellant is 100, then rocket motors can be 150, 200, a very ballpark average figure?
See, if the motor size is increasing, it becomes bigger. The cost of hardware keeps going up in terms of percent. But when it goes to smaller rocket motors, it reduces. So I don't know. It varies from 10% to probably 300%.
Okay. Okay. Thank you, sir. That's it.
Right.
Thank you. The next question is on the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you. Thank you for the opportunity. Am I audible?
Yes, sir.
Yeah. So last quarter you said that you had a 500 crore order book and you will execute that roughly in this year, subject to pick up by customer inspection and pick up by customer. Now we have 1100 crore order book. So do we expect this 1100 crore to be executed in 12 months? And how much would it be this year? That is March 24. And first quarter is only 60 crore. So do we expect acceleration in Q2, Q3? If you can just give some guidance on the execution speed.
So actually, there will be some improvement. We are in the execution phase now, and the clarity will come in going forward. We will have the clarity. But the total order book out of which is about 1,000 crores relating to the other than O&M. O&M is of course it is there for next 7 years. That's 123 crores. Rest of the order book has to be executed in next 12 to 18 months down the line. And we are expecting to be completed, this orders to be completed in next less than 18 months.
Okay, so is it 18 months or 12 months? Because last phone call you guided.
18 months. This is the overall order book is
the emergency procurement of shaft and flare is 12 months. But other orders are there 18 months and even some are there for 24 months also. And this emergency procurement, yes, half of that we will be completing in the current financial year and half will go to next financial year.
Okay, and how would the build-up will be? Will Q2 be much higher than Q1?
We have to see that we cannot comment on at this stage.
Okay, but you said just now that Flares will be.
It is early to say. We keep on producing. Now, delivery in the quarter depends upon the agencies coming and inspecting them and then issuing a certificate for delivery. When we have to deliver them, then only it will come into the revenue and it will come into profit and all those. So, exactly telling quarter is difficult, but we are trying. We are trying to push as much as possible.
Okay. All the best, sir, and thank you. Thank you.
Thank you. The next question is on the line of Santanu Chatterjee from Mount Intra Finance Private Limited. Please go ahead.
Thanks for this opportunity. I just want to understand your order book a little closely. On 31st March 23, your order book was 521 crore, and order inflow in year-to-date FY24 stands at 725 crore. Together, it comes roughly around 1246 crore, and you have executed 62 crore in the first quarter itself. So that makes it a 1184 crore order in hand. But you are showing 1108 crore in your presentation. So why this 76 crore gap? Is there any order that was already dropped from our list, sir?
No, if you hear my earlier clarification, whatever orders we are declaring with the contract value, which is inclusive of GST. The 725 crores is inclusive of GST. If you see our declarations, there we clearly mention inclusive of GST. Right? When we finalize the order book, we will take only basic, because the basic value will be coming into the revenues. So you have to remove 18% in that.
Okay. That is the GST, for the GST purpose, this difference is coming.
Correct, sir.
Okay. And sir, as you have mentioned in your last Concall that you have guided for to achieve 700 to 800 crore revenue within the next 3 to 4 years. That means 26 to 27. You are expecting more or less 700 to 800 crore revenue. So can you give little color into it? Suppose for FY24 or FY25, what would be the run rate in terms of revenue, sir?
Sir, with the existing orders and deadlines, we need to do at least 500 to 600 crores in a year, sir. With the existing orders and deadlines, we are working towards execution.
Okay. Thank you, sir. Thanks. That's it from my side.
Thank you. The next question is from the line of Aman Vij from Asut Investment Management. Please go ahead.
Thank you for the opportunity again, sir.
Hello.
Hello, Mr. Vij. The line for the current participant has dropped off. We'll move on to the next participant. That is from the line of Viraj Mahadevia, an individual investor. Please go ahead.
Hello, sir. Congratulations. I think you've laid a phenomenal foundation for the years ahead. Just a quick question around your ability to execute. Assuming order book is not a constraint at all, with your new capacities that you've just initialized, how much in annual revenue booking can you do in the next 2 to 3 years? Is it upwards of 1,000, 1,500 crores?
Yeah, thanks for the congratulations, sir. Like we mentioned, we are looking for something like around 500 to 600 crores year on year. There can be a difference of 10% plus or minus. That is our what is visible right now.
But is the constraint on that 500 to 600 a function of the order book that you have today, or is it a constraint of the capacities that you have in place? That's what I'm trying to understand.
See, this all revenue is coming from the defense order. So defense orders, it is order to order we have to count. We can't go on counting like industrial explosives that, okay, there will be consistent off-rake of this. So what we are giving this product this year, I think next year another product may come into it and take over. So it's very accurately calculating and counting is difficult.
So that I understand. The question I'm asking is slightly different. assuming you have a 5,000 crore order book today, with your current capacities, how much will you be able to execute annually? Can you do upwards of 1,000 crores, assuming you have an order book of 5,000 crores today?
No, we don't have 5,000 crore order book. So 5,000.
No, assuming. Sorry, my question is, if order book was not a constraint, how much revenue can you book with your current capacity?
So the capacities, revenue-wise, I don't have a calculation, but capacities vary from the product to product. We have these all fall in different categories. It is not the same plant used for each product, different plants. So different plants have got different licenses and capacities. So as per that we go. I think a rough estimate, if you expect me quickly to give, we can do up to around 2,000 crores with our present
Excellent. Okay. Fantastic. That's really helpful. My second question is, presumably your legacy business that was doing explosives for Coal India and mining is probably a low margin business. And now there's a visible change in your order mix going forward, with 80% being for defense. Yeah. As the current quarter's execution ratio between defense and non-defense mirror your current order book of 80 to 20, what I'm trying to understand is pushing hard at this 25, 26% margins and whether it's achievable. So what has been your revenue ratio between defense and non-defense in Q1?
So first quarter, our defense and non-defense is ranging between 60 and 40%.
So 60 is defense, 40 is non-defense.
Correct. But
and with that you
change.
Yeah. It may change. Understood.
Yeah,
Understood.
Because the mining becomes a seasonal business. It is in rainy
Understood,
season.
sir. Understood, sir.
Now we'll be into execution mode of the orders received. So
right. So I think quarter to quarter, I take your point, it can vary. But over time, if your revenue mix mirrors your order book, which is 80 defense, 20 non-defense, then logically your margin should be upward of 25%. That's the way I look at it.
This order book says that, but here if you come to industrial explosives and accessories, these are not long-term orders. Only Coal India and Singareni orders are long-term orders, the institutional buyers. The most of the other buyers are all dealer network, or we depend more on export, which is regularly it is. So even though it has not appeared as in the order book, but those orders will be larger than what the ratio we have in the order book.
So so last question.
Orders on a retail basis, a day-to-day basis, we receive the order, we do the orders and supply it in commercial.
Sure. For the export opportunity, are you seeing more inbound orders, or are you proactively appointing agents or salespeople in specific geographies of friendly nations, so to speak?
In terms of commercial explosives, yes, we have agents, since we are an old company, traditionally we are doing business and we have people who are there who are traditionally buying or working on that. We go by that. And the defense explosives, yes, in some friendly nations we have agents, in some places we are directly dealing.
Understood. Thank you very much. All the very best to see your execution of 500 plus crores this year.
Thank you. With all your good wishes, yes, we'll definitely.
Thank you. Good.
Thank you. The next question is from the line of Anant Jain, an individual investor. Please go ahead.
Thanks for the opportunity, sir, and congratulations on good numbers and the great order win. My first question is, there was an RFI that came for shafts and flares where they mentioned that, the procurement phase, it will be 11 lakhs.
Could you please repeat, sir? I think
there was a final EOI for shafts and flares from MOD,
right?
Where they had a prototype development phase and they also had a procurement phase.
Yes.
So is the current order booking, the orders that we got currently, a reflection of that EOI?
No.
So it is completely different.
Yes.
Because that EOI had 11 lakh shafts, 90,000 flares, 118, and 1 lakh 50,000 flares 218. So is that another order that's going to come, or is it like that our EOI is no longer valid?
We do not know. At the EOI is a very, very early stage. So when, how much the EOI has to get converted into RFP, and then RFPs have to be answered and all those. This is what we got is emergency procurement. It is processed at a very fast rate and released. So the other part we cannot say now when that will come and all.
Okay, great, sir. My next question is, if you have the information that in last 5 years, how much shafts, flares, / countermeasures have been imported by India? Because I think before we came into picture, everything was imported. So if you have some data around how much imports have happened for these shafts and flares.
Right now we don't have those figures, sir. I have to
Okay.
Past 3 years, yes, we are substantial quantity we are supplying. Not all types, but particularly 3 types we are supplying. And then now in the current order, other types also have come.
So now India's fleet is majorly French and Russian, and since we are developing shafts and flares for both NATO and Russian make aircraft, would it be like, you know, are we kind of able to put the entire Indian fleet with what we are supplying right now?
Yeah, we'll be able to supply entire fleet.
Oh, great. That's superb, sir. Last question that I have is on the grenade and the side, sir. There have been significant delays on this. And I think to an earlier participant, you had mentioned that, you know, we can expect an order any time now. At the same time, we keep hearing that, you know, the government has stopped importing grenades and has asked both the armed forces and the paramilitary folks to source it locally. So do you also think there could be an emergency procurement for those for grenades as well?
I think it will be there because we are getting communication from these agencies about that, and we are responding to them.
Okay, sir. I think that's it from my side, and congratulations and once again.
Right.
Thank you. The next question is on the line of Rajiv Rupani, an individual investor. Please go ahead.
Yes, sir. Congratulations on a good set of numbers. I will ask a few questions on the explosive side. Sir, first, could you let me know a raw material ammonium nitrate? What are the prices now currently?
Now, more or less, the prices are stabilized, sir. Now the supplies are normal.
As on date, except one company that is Deepak Nitrate, all the ammonium nitrate is being produced by public sector companies, and the pricing policies are different. And imported ammonium nitrate also, the price varies from different sources.
So could you see better, since the prices are stabilized, could you see better margins on the explosive side going forward?
Yes, for the past 1 year, yeah, the margins have improved.
Okay, and now our explosive order book is 77 crores. So what is our capacity utilization now currently?
Which is very less, because due to the, normally the large players will offer the tenders only once in 2 years. So earlier at the time when the Coal India came, we did not go aggressively because of the instability in raw material supplies and prices. Now again, the utilizations are very less till now. I think going forward there will be some good improvement.
Okay, and in your opening remarks, you talked about, this underground mines, mining for coal improve from 4% to 10% by FY30. So what will be the impact for the demand for explosives?
Yeah, the demand for permitted explosives will go up now. Demand right now, the demand is more for the bulk explosive supply, bulk plants and bulk supply. When it goes for underground mining, the demand comes for more for the cartridge, small cartridge explosives, permitted explosives.
Okay, and my last question. Historically, I've seen whenever this explosive order has been awarded by Coal India, so a major chunk goes to solar industries, then it goes to GOCL, and a very small part comes to us. So could you explain this, and could we see a change in trend, bigger orders coming for us?
While we were working on defense and building up our products and capacity for defense production, they have built up their large capacities for industrial explosives and all those. With their capacities and all those, yes, yeah, they will try to take major chunk and go for the prices and all those. So we are not aggressively competing with them in terms of prices or in terms of quantity.
Thank you. That's it from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Utkarsh Somaiya from Utkarsh Somaiya Company. Please go ahead.
Hello. Thank you for the opportunity. Am I audible?
Yes, sir.
Can you please tell us in order of low value to high value all your products, like which is the highest value and like my highest margin accretive, and which is the lowest margin accretive product?
Sir, we do different products, which range from almost in tens and hundreds. So it is very difficult to manage. See, it's a simple theory that where the manufacturing capacities are large, the margins will be less. And where the capacities are limited and the players are limited and manufacturing difficulty is there, we can get a better margin. And you know that defense products have got more difficulty and technology-wise they are and all those things.
So which would be from your product basket?
Oh, all the products, all the propellants and rocket motors and mines and high explosives. So all these are the higher margin products.
Okay. And another question, from all the missile programs that you have mentioned in your investor presentation, how do we kind of understand the content percentage which Premier would get from an entire missile order that is placed? Like, what do we make of it? Like, when we read about a certain missile order being placed, how do we kind of understand that how much benefit will accrue to Premier?
Again, that changes from the system to system, but generally, I think we can go maximum up to 10% of the total order of the missile. Because missiles have got guidance system, onboard computers and the hardware and so many avionics and all those there. The major cost goes towards that. So our part, that is the energetic materials and all those, around 10% you can roughly take.
So I can take 10% ballpark across the board. So for this 550 crore order of shafts and flares, so what is the order of the missile from which you got a 550 crore order?
I've not understood the question. Shafts and flares are not missiles, and it is 100% made by us as a product. It is not a part made by us.
Okay. Thank you so much.
Right.
Thank you. Ladies and gentlemen, we'll be taking the last question. That is on the line of Aman Vij from Astute Investment Management. Please go ahead.
Thank you, sir. My question is on the capacities. So if we talk about in terms of anti-measures, flares and shafts, what is our capacities currently? Is it good enough to supply for the next 3-5 years, or do we need to expand? And similarly, if you can talk about in terms of the ammunition, which is grenades, what is our current capacities? And if the emergency order comes, do we need to do some extra capex?
Ammunition, we can, the present capacity, we can around supply, that is the medium caliber, because it's smaller caliber, large caliber, the quantities will vary. But medium caliber, which you are concentrating, you can do around 200,000, that is 2 lakh numbers per annum. But these capacities and all those things, what you are saying, I understand that you are asking about the capacities are sufficient for coming 35 years, is it?
Yes, sir.
No, like season, in these products, it is not that only one product consistently we keep on supplying. It keeps on going up and down. Suppose tomorrow we have to make some other product, then we may have to go for some other capital investment and all those. So it's a continuous ongoing process.
Yeah. So for ammunition, you mentioned 2 lakh. What is the same for flares, shafts, and anti-majors?
One second. I'll come to one example. Rocket motors. Today, with our capacity, we can do from 50 millimeters to 2000 millimeters spare. But if a requirement like that SSLV comes, we cannot do in our plant. Then we may have to go and build a new facility where capital investment has to be made. Similarly, others also, different mines, some mines we are making, other big mines what we are going to make, or warheads we are going to make. It depends. Some balancing equipment, some other additional equipment, it comes like that.
Mm-hmm. That is understood, sir. On the flares part, I was just asking. Flare shafts and all those, what is our capacities currently? Is it like 5 lakhs? Is it 10 lakhs? Anti-majors combined?
Yeah, the assembly lines we can do 5 lakhs, 6 lakhs we can do. See, these systems, if the requirement goes up, we will be working more shifts. There are 3 shifts in a day. Right now we are producing only 1 shift because it's a hazardous product. We can always go to second shift and increase our capacity.
Oh, okay. So even if we get 2x, 3x the requirement, the same plant can be used to supply. Yeah. And is it also true for the grenade ammunition? You said 2 lakh per annum. Is it 1 shift or is it 3 shifts?
Yeah, right now what I told is only 1 shift, but there also we can work for 2 shifts.
So if say 5 lakh orders come, we can supply grenade ammunition of 5 lakh also.
Yes.
Okay. And the first order you are expecting will be in lakhs only or in thousands? The emergency order.
Thousands only. It will be in thousands only. See, the lakhs requirement comes only from MOD. Other paramilitary forces, CRPF, and all those, they will be in thousands only.
Okay. So the order which we are expecting sooner is mostly from paramilitary forces, not from MOD.
Yeah. Right now the activity is picked up there. We are getting the communication from paramilitary forces. MOD goes by the RFPs, bigger RFPs, which are already there, which we have also participated, but they are yet to be opened and yet to be done.
So that MOD order, which was the much bigger order, that we are expecting maybe next year, not this year.
We don't know. We don't know at all because earlier also 2 such RFPs after everything they were cancelled by MOD. So we don't know. We cannot say.
Because it's pending for a long period of time, right, sir? We had applied, we had basically quoted in the RFPs, but there is no update from MOD.
That's right. These RFPs and all those, we don't know because they take longer time because NCNC is going there, conducting the trials and all those. It's a long drawn process.
Okay, but the trials part on the NCNC samples, that is also ongoing. I thought the trials was done on the MOD side.
No, it is not yet done. It's going on. It depends. There are multiple players. They have to import and submit the samples for testing and all those.
Okay. Multiple players, sorry, sir. In terms of customer or in terms of competitors, you are talking about multiple players?
Competitors. There are more participants in the RFPs.
For grenades also, sir?
Yeah. Because it is not restricted that 100% you have to produce in India.
Oh, okay. How many players have bid for the same?
I won't be able to say. There can be serious players or there can be...
Not the name, sir, but number of players. Is it like 2, 3? Is it 5, 10?
Yeah, 4, 5 players are there.
In the grenades part?
Yes.
And there will be PSUs also here?
There are public grenades. Other ammunition manufacturers are also there, small caliber and all. Yeah.
Sorry, sir, the voice was not clear. I was asking, will the PSUs like BEL, ECIL, they will also be here or only private players are there in this?
They are, I think one of them is there. We are not sure.
Okay. Thank you for the answer.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. T.V. Chaudhary for his closing comments.
Yeah. Thank you very much for all of you to support your company, and then all the appreciations what we receive that give us more strength to function better and then even have better results in future. And I hope that the same support and the same appreciation continue from all the stakeholders of India. Thank you very much.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Premier Explosive Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.